Hello and welcome to tradingfloor.com's weekly Asian focus. In this video with Andrew Robinson, market analyst for Saxo Capital Markets in Singapore, he looks into the outlook for Japan and the growing expectation that its central bank will provide more stimulus to ensure it reaches its inflation and growth targets this year. Welcome, Andrew.
Hello again.
Just last month, the Bank of Japan for the third time this year purchased government bonds and other assets. Is it set to continue on this stimulus route when it meets again to review rates and the Japanese economy on October 30?
Well, certainly the markets are gravitating that way. They're looking for additional stimulus at the next meeting. There's certainly increasing political pressure on the Bank of Japan to act. We have a new finance minister, we have a new economics minister, and both of them have been quite vocal in their attempts to get the Bank of Japan to introduce more stimulus to achieve their 1% inflation target. So certainly the markets are expecting it. We've seen a little bit of yen weakness, which I think is tied into these expectations. The biggest risk is that they do nothing and then the market is totally disappointed.
And what about other stimulus options like purchases of exchange traded and real estate investment trust funds? Is this at all likely?
Well, it has been used in the past, but of late, certainly the Bank of Japan has been focusing more on the JGB market, either in the amount that they're committing to it and the tenure and the extent to which they're going to support it. So I think generally the market is more focused towards the JGB market, certainly.
And at its meeting next week, the bank is expected to release its twice-yearly outlook report. What admissions, growth and inflation-wise, is it expected to make? And how will this affect overall market sentiment about Japanese assets?
Well, certainly I don't think the Bank of Japan will produce any surprises for the market. There'll be no expectations for an improvement in the Japanese economy, and it's all a question about the inflation numbers, I think. If they start to lower their inflation forecasts going into 2013-2014 financial year, then that will start to look pretty bad on the Bank of Japan, given in mind that they have mentioned their 1% inflation target, and if they start lowering it below 1%, then it's going to look pretty bad. So I think generally they will certainly have a lower forecast for inflation, but they'll say that they are slowly but surely getting towards their 1% target. When it comes to the growth sector, I think obviously there'll be no surprises if growth expectations are lowered, given both the domestic situation and the external situation.
And considering the nature of global economies, is reaching this target of 1% for the Bank of Japan already this year at all realistic?
I think we have to say no, basically. Certainly the Bank of Japan has been at pains to say that this 1% target is a medium-term target, and I think that they can delay reaching the target for 1, maybe 2 years, but any further than that, then it does look to become a bit of a pipe dream. Certainly for this financial year, I think it is going to be a real struggle.
And based on this backdrop, a strong yen and a weak export situation, is the Bank of Japan thus set on a kind of infinite stimulus providing route?
Well, I think they're very similar to most of the central banks around the world. As we've quite often talked about QE to infinity, already the Japanese have had a head start on most of the other central banks. So I think, yes, it's their only option. What else can they do to try and stimulate the economy? They have to continue going down this stimulus route, this quantitative easing measures. It hasn't worked in the past, but they're probably hoping that it will work in the future. As we've been quite vocal about it, we don't think it's a viable solution, and we will inevitably hit the same milestone.
And the dollar-yen currency pair has been helped higher of late on increased expectations of more stimulus. Can you give some insight into how it's been trading and what levels you expect as we move closer to the Bank of Japan meeting?
Well, certainly we are very close to this key 80 handle. I think the markets are already talking about the possibility of extending the rally through to 82. Some say possibly by the end of the year. As I mentioned before, the big risk is that if nothing happens next month, next week, then we will face certainly a lower dollar yen in the very near term. My immediate support levels are 79.45. That's a 200-day moving average. I think we need to hold above there into next week to stand a chance of rallying through 80 and towards 81. If we break below there, then there's a bit more support around about the 78.50 level, and that certainly needs to hold before we have a chance of a rally through to the 82 level that everyone's talking about. Personally, I think dollar yen has a habit of never quite getting to the targets immediately. It's a very slow, lengthy process to get there. So I feel there's more chance of us getting there in Q1 rather than in Q4.
Thanks for your insights this week into the Japanese economy and the outlook ahead of the Bank of Japan's meeting next week, Andrew.
You're welcome.
Take a look at tradingfloor.com for more insights into the Asian region by Andrew Robinson.